First of all, I want to thank you for joining and welcome to Adapting to the New Consumer Reality, the 2026 Consumer Outlook presented by NIQ. Before we get started, I want to give a shout out to members joining from Naturally LA, San Diego, Seattle, and Naturally NorCal. We're all part of the Naturally Network and have come together today to host this programming. The national network is made up of 11 chapters around the country with over 6,000 members and a reach of nearly 50,000 people, representing 25,000 companies. We are community organizations with a mission to foster sustainable and responsible business practices, stimulate conscious business growth, support entrepreneurship, and develop exceptional leadership within the natural products community. Our chapters invite you to join us for upcoming events. Naturally NorCal, we have a coffee meetup tomorrow morning at 4 different locations of Equator Coffees. Naturally Seattle has a webinar on February 5th, a Naturally Rising info session for those who might want to apply. And Naturally San Diego has coffee and convos at Jimbo's on February 6th. For those brand leaders in the room, please take note, applications are currently open for our signature pitch competition, Naturally Rising. Each chapter will host their own competition, and the winner of each will go on to pitch at the national competition at Newtopia Now. Finally, just a little bit of housekeeping before we get started. We welcome you to introduce yourself in the chat, but please input your questions in the Q&A box. You'll find both of those panels on the bottom of your Zoom menu bar. And now I am going to hand it off to Meryl Gilbert, CEO of Curious Futures. Meryl, take it away.
Thank you. Thank you, everyone, for joining us today. As Monique said, I'm Meryl Gilbert. I am a longtime member of the Naturally Network, particularly in Northern California. And a lot of the work that I do centers around really supporting founders and helping them make stronger decisions around the stability of their business and get ready to access capital. And so today's conversation really sets us up for that. And we are at an interesting time period. We are 1 month into 2026, and we are already dealing with so many uncertainties. And so what's great about the conversation that we'll be having with Rachel and Steve today from NIQ is to not really give us the answers, but give us perspectives and give us ways to think about what's next for our businesses, for our operations, for our consumers and our customers. And with that, I'm going to turn this over to Rachel. Rachel and Steve will each introduce themselves, but they're going to guide us in a conversation, and I will have some conversations and questions throughout this with them, but we're leaving time at the end. As Monique said, please put your questions into the Q&A, and we really look forward to this lively and timely conversation. Rachel?
Yeah, thank you, Meryl. Thanks, everybody, for joining us today. Steve and I are really excited to share a bit of an outlook for the year. Just because we've already completed a month here doesn't mean we can't talk about the year as a whole. So just a quick introduction before we get started. I am Rachel Bonsignor. I'm a vice president at NIQ Consumer Life, which is our syndicated consumer trends arm. I have been working in the consumer trends space for over 10 years, in market research for over 20, and really excited to share just the long-term kind of view on consumers.
And I'm Steve Zurich. I lead the thought leadership practice for our strategic analytics and insights practice area. I've got 35 years of experience in CPG with companies like Procter & Gamble, Gillette, GSK, and Haleon Consumer Health. Most of my experience has been in sales leadership and in category management functions, calling on retailers nearly 100% of my career.
Okay. So just to get into what we're going to discuss today, first we want to look at really the big picture, the 1,000-foot view of where we stand today on consumer sentiment, on the economic landscape, on some forces that are really impacting the year ahead. Then we're going to get into how people are reacting to this. So what are ways that we are diverging? What are some ways that sentiment may be souring or seem apathetic, and how you can, and some bright spots as well, to figure out how you can kind of harness that current sentiment for your own opportunities. Then we're going to talk a little more directly about the relationship between consumers and brands and what the future of that may look like. We're going to finally, on our last kind of big topic, talk about seamless commerce and what is happening with the omni revolution. And then, as time allows, there's a number of other disruptive trends that don't necessarily fit in the buckets above, but that we think are going to be really influential in the year to come. And so we will touch on some of those and are really curious to hear your questions about them as well. So before I hand it over to Steve to kick it off, just wanted to make sure, just ground everybody a little bit in the insight sources that we're pulling from. NIQ has a really wide array of both consumer data and transactional data to pull from. The majority of what we're looking at today comes from a few key sources. The first is, as I mentioned, Consumer Life. We are the longest standing consumer trend study of its kind in the world. We have been fielding in the US for over 50 years, globally for over 25, and we're really looking at the big picture of the evolution of consumer attitudes, values, and behaviors. We also have a syndicated path to purchase study called Category Shopping Fundamentals, where across over 100 product categories, we are looking at the full journey from beginning to end and all the things that influence consumer behavior when they're shopping for different items. And then finally, every year, NIQ does a big consumer outlook study where it is really big picture data, survey data on how people are feeling and what they're doing, as well as purchase behaviors too. So you get that full outlook. And so this is certainly just the tip of the iceberg in what we can share about consumers, but hopefully you find it inspirational and it can lead to future discussions. And so I will hand it over to Steve to kick us off.
All right, thank you. We can go right into the next slide, where we stand today. So it's no surprise that consumers are really feeling a little bit stressed right now, despite what is in the news cycle from an administration level. The reality is that consumers really don't have a lot of confidence in the economy at this point. They're feeling the cost of living more so now than ever. You've probably heard some statistics from some of the financial houses that the top 10% of wage earners control almost 50% of all consumer spending. So the other 90% are kind of being overshadowed by this 10%. It appears that the employment rate is somewhat stable. At least that's some of the indications that we've had as early as today. But we're not adding a ton of jobs, and retail is definitely one of the largest sectors that is losing jobs. If you haven't noticed, a lot of stores have much less labor in them than they've had in the past. And that's continuing. So that's a challenge. That's also kind of an inspiration for bringing more technology to retailers. So we're seeing more self-checkout lanes. We're seeing more adoption of buy online, pick up at store. And I think that's a lot to do with, what the experience is, in the store in terms of having enough people to check people out. That labor is really being deployed to just stocking shelves as much as possible. If we go to the next slide. So the great thing about this presentation is just what Rachel outlined. It's marrying together everything from our consumer outlook survey to Consumer Life, which she hears me almost on a weekly basis say how fascinating that 50-year trend can be and the questions that are asked. So, from our outlook survey, it's no surprise that increasing food prices is still number one on the list of concerns that shoppers have. But things that are making big jumps are things like global conflict, threats of war, job insecurity, economic downturns, and things like that. So, when you have these situations in the economy where you've got shoppers that are starting to feel this way, there is a natural contraction And that's competing actually with another contraction that's happening, or another shopping philosophy, I guess you would say, that's happening with Gen Z, which is, and other shoppers too, but mostly Gen Z is pushing this, is that they're buying for need. They're wanting to consume everything that they purchase. It doesn't feel good to throw things into the garbage, especially as food prices get higher. So you may be seeing that some of your larger sizes are maybe suffering a little bit, and your smaller sizes are doing better. That's the behavior that's generally driving that.
Getting into behaviors a little bit more too, in our category shopping fundamentals path to purchase study, we're able to look at what the consumer reaction is and what are ways that people are shifting in response to not just rising prices, but other sort of economic and social pressures, or just the stress they're facing at going about their daily lives and feeling really uncertain about the future. And so we have seen through, on a really broad level at first, in response to changing prices, most people are doing something. There is a real minority of the population that is not reacting in some way. And that could be being much more vigilant about the cost of your trip, stocking up a lot more and just being smarter about bulk purchases, switching to lower priced options. We'll touch on private label a couple times in this presentation, and really focusing your purchases on your essentials. And so that's kind of the average across a lot of the categories that we measure. But what we're also seeing is that there's certainly a lot of variation depending on the individual product group. So something like baby care, really rises to the top because it's something that you can't not spend money on, but you certainly want to be smart about it and not overspend. Interesting that pet care is sort of at the bottom of the list here, but you can see it really does vary across the board. And, brands really do need to be very vigilant about how much more often people are switching to other brands, how variable it is depending on what category they are in, how widespread it might be, and what they need to do to really play defense and not really count on brand loyalty at all. And so we've been talking about this certainly for a while. Obviously, some of the rising prices of the last year or so, especially with tariffs, have been even more influential. But we were talking a couple years ago about how people just don't want to pay full price for everything. And, deals matter, feeling like you're getting value matters. We'll talk about that a little later too. So there is a lot of just constant reshuffling that consumers are doing. Another thing we've been watching closely, some of these projections are from late last year, but cuts to SNAP coverage are going to have a huge impact as well. So we were looking at some estimations of, a huge risk of sales in the beverage spray space, for example, as well as other kind of food and associated items. There is just going to be, a big risk in spend. We see the people who rely on SNAP really leaning a lot more heavily on value retailers. And so that's really where more of their money will continue to shift, or more of their attention will continue to shift, because again, they are under this extra pressure. A lot of the benefits that they were counting on to get by are really being threatened in ways that they had not previously expected. And so this is another way we're seeing, a lot of pressure and more shifts that may happen in consumer spend, and a lot of unpredictability in how and when and to what degree that will continue to happen as the year goes on. Back to you, Steve.
Yeah, so private label has been the talk of the town for the past few years, and as it should be, it's really gaining share in a lot of retailers, and that's being pushed by in a couple of ways. It's being pushed by the fact that private label has just gotten dramatically better over the years and has a very high value proposition, and that's what's driving a lot of the share gain. We're also seeing that dollar volume growth is almost 3%. Now, if you contrast that to unit movement growth, which is only 0.5%, what that tells you is that growth is being driven by price. So private label is actually closing the gap on national brand. It's not the other way around where national brand is closing the gap on private label. Private label is actually closing the gap on national brand. And that's happening because we have shoppers that are in the marketplace right now that are saying, you know what, the store brands are really, really good. I'm willing to pay more for them, and I'm getting an experience that I enjoy. So from a national brand perspective, how do you really combat that? Because national brands have the advantage of having consistency across retailers, whereas private brands, they can be fairly inconsistent across retailers. But what I would do as a national brand is I would be looking at what kind of innovation is happening in private brand right now, because they are innovating almost not quite to the same level that national brands are, but they're gaining a lot of ground and they're willing to try things that national brands, quite honestly, they've got a financial hurdle that's in place that a private brand doesn't, because the private brand has a direct line to distribution, whereas national brands, which is where all of my background has been, we always had to pay slotting fees. We had to come up with stories to get our things placed on the shelf. Private brands don't really have to do that, at least not nearly to the degree that we did. So it's a really interesting phenomenon that's happening, in the private brand space. When we look at, the growth in media spend, there's less media spend that's happening, as an industry, only because there is so many different ways that you can spend on media. There is linear TV is not really, as much of a thing as it used to be. Streaming, is definitely where things are at. And then you've also got retail media networks that are in there. We're seeing a slow adoption of buy online, pick up at store, but it is being adopted. And for some brands that live and die by impulsivity of a consumer, retail media networks really provide that outlet of being able to, interject that impulse distraction in a shopper's journey when they're online.
That is such a great setup for the rest of this conversation. Thank you so much. Before we jump into this next section, I'm just curious if you're seeing any common mistakes that are being made by brands as they navigate some of these new perspectives around pricing, private label, where they sit, some of the things they might have to consider. Innovation is such a important part of that. But I'd love if you can just take just a minute before we jump into this next section and maybe give us some of the things that you have learned that might benefit us at this point.
Yeah, Rachel, if it's okay, can I start?
Yeah, go for it. Yeah.
All right. One of the things that I find kind of fascinating, and we've heard it from a few clients, is that they're rationalizing their online spend. And when you plus into that a little bit, what they're talking about is they're just reducing their spend online, which is absolutely not the direction that you should be going in, because everything is moving to an online world. And what we see from a lot of our category work is that shoppers tend to shop across the market. They're not as deep as, traditional shoppers, 20 years ago, 30 years ago were, where they were loyal to a retail banner and every week they were in that store. Now there's more of this, we're going to just scan across the market, and we see things that are happening that where basket sizes are getting smaller. Fill-in trips and quick trips are getting more frequent. And stock up trips are becoming less frequent. So there's this spear phishing that's going on across the market, and what's driving that is online presence. So if you're moving towards reducing your online presence, don't expect your sales to grow. It's not going to happen. You really have to be managing all of these different things in parallel.
Rachel, any thoughts before we go on?
No, that's a great point. It's a good
It
summary.
really was. And I
Yeah.
really like that term, spearfishing.
Yeah. We'll hear a lot more about it, I think. So we've talked about a lot of big picture things, but wanted to get into some more specifics about how consumers are reacting. We mentioned up front we have such a wealth of information on consumer sentiment and behaviors. So wanted to highlight a couple of trends that we're seeing. And the first thing I want to talk about is just this idea of, you can call it a lot of things, mass divergence, mass polarization, all of that. In the long-term consumer confidence and mood data that we track in consumer life, when we look at the big picture, when we look at the total population, certainly we see some national trends that, maybe tell us a lot about where the country overall is headed. So in the last year or two, even though things have been tricky, some confidence metrics are up. But what we're learning more and more as we dig just even one very basic level deeper is that that does not give you anywhere near the full story. And so you really can't take these national averages at face value because there's a lot of splits, right? So if you look at something like, the country is going in the right direction, and the other option in this question would be the wrong track. In just a year-over-year trend, certainly it is, rising for a lot of common demographics here. But look at the gap between men and women over just a year and how much it widened. Look at millennials versus Gen Z. There is not a sort of universality of the strength of these sentiments. There is a lot of division. There is much more bullishness on some groups than the others. And we do feel like this is a fragmentation that is going to continue and feels more prominent than it did in recent years. And, we see similar things when it relates to, feeling optimistic about the future of the US, whether now is a good time to buy versus wait. You can see that, for example, women are fully flat on that and from those two items, whereas men have a little bit of an increase. And there is just a lot of split. And so anything that you're doing as a brand to segment your audience or consider your target demos, and consider just how they feel, you really need to get specific and you really need to understand what is the nuance of each groups. And this is even not telling the full picture of the story, right? We cut this by income, we can cut it by, within each of these groups. And then you're going to see a lot of other different pictures too. We feel that, sentiments of consumers right now are dependent on so many factors that it's very hard to come up with, kind of big groups. There's so much nuance and complexity in every part of the nation that you're looking at. And so it's a big learning for us and something that we think will continue as, the marketplace and media and all sorts of other institutions continue to splinter off into a lot of different sectors. Another sort of big picture thing we're looking at, and again, this is going to vary a lot by demographic, but a lot of the unpredictability we talked about in the very beginning of this session has a massive impact on how people feel about their prospects now and in the future. So we ask regularly, this is, I think we even asked before this, but this is very much like Great Recession era and moving on. We ask people, what does money mean to you? And there is sort of a downturn in this idea that money can provide people with comfort or control. We have just under a third, not that many Americans saying that the economy in this country is really fair at providing us opportunities to get ahead. That stayed very flat, so there's not really a boost in positivity about that, even when the economy was better. So this idea of upward mobility is just not really in the cards for a lot of people. And, we have a lot of evidence of, people also kind of not really feeling good about just general middle class life and citing more negative than positive associations with it. And we think for a lot of those reasons, everyone's just thinking a lot more short term. They know that the economy and prices and our political situation could change at a moment's notice. And so something we also ask really often is when you think about the future and what it means to you, how far ahead is it? And over a decade, there's been a massive decline or a massive rise in not wanting to place it at any more than 5 years, and that may even be generous. And so, and often these are people who are in most precarious or uncertain situations, like low-income consumers or Gen Z, who's still very early in their, professional and financial lives. And so, this is sort of the backdrop with which a lot of consumers are entering stores and considering brands. It's just like really shaken their confidence in a lot of ways.
Yeah, so despite all of that, and I think if you've hung with us through this point, you've probably seen that there are things that it's very hard to triangulate in on, a linear path that the consumer has, because in some cases they're saying, I'm uncertain and I don't know what to do. But then you get to a chart like this where it says, yeah, we think we're going to have enough over the course of our lifetime to be able to pass on wealth to our future generations. And that's up 6 points. And I'll be able to pay off my house. That's up 7 points. And I can confidently retire and live comfortably. That's up 10 points. So that seems to be completely incongruous with what we've talked about up to this point. But I think that's good because these are all future looking statements. And that's all, those are all things that you can look at a consumer and say, you know what, they're still hopeful. They're hopeful for change. They're hopeful that things will get better sometime in the future. So it's not doom and gloom. They're looking at this close in, 2 to 3 more years of being a little bit precarious, but the longer term outlook is definitely more positive. And then when we looked at, by different demographic group, how willing are some of these shoppers to try different things? Well, affluent doesn't generally move one way or the other because they can the bumps in the road they're not potholes. They're just like little pretzels on the floor. But when you start to get to mid-range and especially struggling, you start to see trial build. And the reason that that's happening is because they're searching for other things that are potentially lower cost, or they've got a better economy of scale. And that is a little bit in competition with things like, well, if you don't have as much money to spend every week, why would you try something that is unproven? So that becomes a little bit of a risk, but the risk to reward tolerance starts to go up when a struggling household starts to feel like their household economics are being stressed and stretched, in an economic time like this.
I sound so much better when I'm muted. Real quick, as there's so much juicy information here. But is there a consumer group that is most misunderstood out of this, that brands are not necessarily reacting to in a way that is helping them make better decisions or helping them avoid more mistakes?
Yeah, I mean, I think it's a little cliche to say this, but Gen Z. I think that Gen Z has been written off in a lot of ways for being, just behind on a lot of things, or not as savvy when it comes to shopping, or not as smart about, their purchases. And some of that is, they're still kind of new to the world. They're still coming into their purchasing power. They do sometimes, those limitations, like financial limitations or knowledge limitations, make them impulse shoppers. They might not buy things that are high quality or anything like that. But they are still evolving. And, the oldest Gen Z is going to turn 28 this year. And that's pretty significant, right? Like, we can't talk about them as just college students or teenagers anymore. They're a big part of the workforce and of the economy, even though they are certainly not as big of a population as millennials. They're starting to have kids even. And I think that a lot of brands don't necessarily track them closely enough and how they're evolving, even though everyone talks about Gen Z all the time, to see which habits are really solidifying and which habits they can like kind of push them towards that would make them smarter, more reliable shoppers now that they have been really exposed to information for a while. For example, when it comes to like technology and online shopping and all that stuff, Gen Z is the generation that is most comfortable giving away their data as long as they get something in return. They just are such digital natives that they know that's part of the trade-off. And so you can really push loyalty programs on them. You can get in with them early. You can say like, look, we need you to sign into this and do that and link it to your social accounts or whatever it is, but you're going to get deals out of it. And you're going to get benefits and you're going to get first look at something or whatever it is. And so I think as much as Gen Z is something people never stop talking about, there's not maybe as much thoughtfulness about who they are today or who they are going to be in like 2 years.
I think the other thing too is, where does AI kind of fall into all of this? I think, the other group that's kind of underrepresented is the better for you consumer group as a whole. Unless you spend a lot of time kind of researching different products and clean label and things like that, it does take a lot of effort. And there's definitely a line in the sand where, shoppers are going to, there's going to be a certain number of shoppers that are going to be kind of middle of the road and they're going to look at it a little bit, but they're not going to really dive into it. And then you're going to have people that really dive into it. And then you're going to have others that just don't care. But AI is really going to change a lot of that because, like what this picture that's on the screen right now is illustrating is you can't do that. Look at the back of every single product. Like that would be a 9-hour shopping trip if you were reading labels for your entire basket. AI is going to take a lot of that away. You are going to be able to put filters in as a consumer, and you are going to be able to curate your own basket of products. But right now, what the challenge is for category managers and merchants alike is that whole discipline is evolving. And what's really happening, it's evolving from being category managers that are managing the shelf to being experience architects that are creating an experience at the shelf and making it easier to shop and easier for that shopper that has a value set that they want to meet. Allow them to do that. I'll give you a personal example. 20 years ago, my oldest son was diagnosed with celiac disease. And at that time, trying to understand what was gluten-free in a regular grocery store was exceedingly difficult. I still remember the flushed feeling I had because it was very, very difficult to find things. Fast forward 5 years from that point, and all of a sudden gluten-free is a thing, and they've got aisles, and it's, you're not having to go to the health food store for that. Those kinds of things are just going to be accelerated to adoption so much quicker when we get to a phase where AI is really user-friendly and it's part of everyday life.
That is such a brilliant thing to bring in because we are all asking those questions, and that was so insightful and helpful. And I do think that that is such a ignored area that we don't necessarily look at. So thank you so much. I'm going to push you into this next section because I know we have a lot more to cover.
Yes. Yeah. And Steve, you are kicking this next one off.
Okay, so reinventing the brand. If we go to the next slide, one of the things that we're looking at is this idea of importance of trust for brands. And when we start to talk about brand trust, we have to include store brands. Um, all the major retailers, and in fact, all the retailers that I can think of, are managing a portfolio of store brands. They are managing them like national brands. They've got brand managers. They're doing promotions. They're doing innovation and things like that. Um, but where brand trust, we are seeing that brand trust, depending on the demographic cohort or the generational cohort, I should say, those can go up or down. Um, where a Gen Z shopper is feeling very comfortable and comes into the store with a brand in mind, they've likely gotten it from this very one-sided relationship that they have with influencers. They think the influencer is part of their family, and the influencer doesn't even know that that person is alive. But they're coming in with that recommendation, and now they're part of their inner circle of recommend people that recommend brands. So keeping your brand equity high should be the number one thing that every brand should be doing. Is get your value prop clearly demonstrated through everything that you do, from a marketing perspective all the way through packaging, shelving, and pricing.
And, we talk a lot about, trust, as Steve mentioned. It's so critical. Value just gets, caught up in all of that too because of raising prices and economic pressures. And so one thing that's really interesting to us, though, is that value means so many more things than price. So in consumer life, for example, we have a wide range of attitudes about, brand choice and, sentiment and all of that. And the idea of a product, the most important thing about a brand is that it offers good value, is generally more popular than price being the most important factor. And what really tends to follow, when we ask about the definitions of value in the consumer life study, the idea of it being inexpensive is very middling. It's not at the bottom of the list, but it's nowhere near the top. The things that are really high on the list, you see this in our data. This is from the Consumer Outlook study on the right. Durability, high quality. Immediately after that is making my life easier. And so these are the things that really generate value and goodwill and really important, positive perceptions and loyalty with your consumers. And then other elements that are really highly correlated to customer service, being good. Steve mentioned like reviews from people I know or people I don't know, transparency. All of these things really are important in building trust and building that value proposition. And if you're just going on price and not stacking it with anything else or, emphasizing it more than everything else that you have to offer, it's not always going to be a winning proposition. And so, how can you really show that you are giving people something that they can feel good about? Another thing that we look at a lot, and I think this is a great slide for this particular audience, is that, goodwill and sort of feelings tend to really diverge depending on the sort of company that people perceive you to be already. And so we've been tracking this again for a while. We have, Great Recession numbers up until today. And the favorability of small businesses is always going to be higher. And of course, logically, that makes sense, right? We consider these people who might be, groups that might be local, that might be more startups, that might have more of a mission, that may not be as established, and you're kind of rooting for them. And this makes a lot of sense. But the gap is really important to look at, especially once you go a little deeper into what else is happening here. The favorability of small businesses really does not change very much across generations. It is actually rising among higher earners, which does make sense a little bit. When it comes to large businesses, there's actually been a rebound since COVID days of unfavorability after it actually was declining a little bit. And so, this is something to think about. So obviously, if you're a small brand that's really good, you can capitalize on the goodwill. But if you are a larger company, that doesn't mean, you're screwed, right? You can find ways to make yourself feel small, to really think about local partnerships partnerships and ways to really kind of look at very small interests that are very relevant to your target. And so thinking about this environment and what people feel really good about already can give you a lot of clues into the messages that you want to put out there. Steve, back to you.
Yep. And I would say there's no better time to be an emerging brand than right now. It is such an awesome time to be that. And I know that, as an emerging brand, there's all kinds of struggles that are completely different than large brands. But emerging brands, small and medium brands, they're the interest in every planogram. They're bringing innovation, and we've only seen about 9% of companies grow their innovation sales, and within the second year, only 50% of their innovations grew into the second year. Part of that could be that year two, the innovations are kind of falling into the camouflage of the landscape, but that could also mean that there might have been a little bit of a miss in terms of what they spent their time innovating against. So that we've got a lot of different ways to measure this. A lot of what we see are line extensions more so than new brands. But we do get asked questions like, if I'm a larger brand, am I losing relevance? And in some cases, that's true. That is the case. Large brands do die, but that doesn't mean that there isn't a pivot there. Because you can introduce a new brand, you've got all your marketing powerhouse, money behind you, and you can actually, bring new life to your company under a new brand. So, innovating is always a good thing to do, especially in trying economic times, because you just have to keep the ball rolling. Yeah. And then, the time to innovate is not when all of a sudden, or restaging is not when you're starting to see brand sales decline. That's almost past the point of no return in some cases. 60% of restages don't recover from a downward trend. You want to be innovating on the up. If your buyers start leaving, especially if you start seeing buyers leave, and you'll start to see it in metrics like conversion rates within retailers, and you'll see your projected buyers starting to decline. It's very hard to get those buyers back once they're out of your brand. So if you can shift them to a different part of your franchise, different part of your manufacturing, that's great. But when you start seeing trends like this, you need to react to them relatively quickly, and hopefully you're more proactive about it, and you're actually onto, moving to the next iteration or innovation before this happens.
That was particularly interesting because there's two things that I feel like you were discussing in there. There's creating value, and value as is very different depending on but it is still based in the premise of I got more than I paid for, whatever that is, whether it's the convenience, the durability, just the overall experience, because we're looking for ways to connect. And I really liked this last part about if people are choosing to switch, or the producer is starting to see shifts downward, looking forward, what are some of the things that they should consider in innovation? Where are some of those trends? Is it in health and wellness? Is it in transparency of ingredients? How do we look at supply chain? Is some of that we just covered looking into those worlds? Like, is there considerations there that really help maintain stability, right? Because I think that's the number one key here, is like, how do we stabilize in an uncertain time?
Yeah, I think supply chain is definitely one that should always be considered, because if you're not on shelf, you can't get sold. out of stocks are, what we see in our data is that out of stock behavior generally, if a shopper finds, if they've come in with a specific brand and SKU in mind, before they switch to another brand, they will look for a size up or down within, that flavor profile or within that portfolio of brands before they make a switch. But as soon as they make a switch, you're almost in that forcing them to try something else. And the risk becomes they like that other thing better and you're not going to get them back. So that's kind of, we talk about this all the time within our four walls is, shoppers don't generally brand switch until you give them a reason to. And the two biggest reasons are you've taken your price up too aggressively or you're out of stock persistently.
Yeah.
That's great. I know we're,
yeah.
Go ahead. I just want to
yeah.
give us a time check real
Yeah.
quick because we've got about 10 minutes.
Okay.
And I know that we've got a little bit more to cover and we want to leave a few minutes for Q&A. So
Okay, great. Yeah, I think there's not too much left. So Steve is going to start us off with our final big section on the Omni Revolution.
Yeah, so the average consumer has about 8 different ways to find and purchase products. So, the idea of being everywhere, with a consistent message is absolutely true. And this idea of looking across the market for deals and for product, is causing this phenomenon to happen. So the challenge is that, you need to reach consumers where they are. Lots of times they're starting their shopper journey at home and they're on their phone or, they're curating a shopping list over a week's time so that they minimize the number of fill-in trips, which we all know are expensive. And those shopping occasions might start at 3 o'clock in the morning. Nobody, it can be anywhere at any time. So, your consistency of message really has to be everywhere. And then, as we start to progress, we're starting to see the true effects of, a true hybrid shopper. Since 2023, the shoppers that say they are only in-store shoppers is down about 12 points from where it was in 2023 versus the fall of 2025. This chart actually says almost the same thing, is that, we're becoming an omni-channel and shoppers thinking about channels. There's very few shoppers that say, that they articulate a channel. They might articulate a retailer, but not know necessarily what channel that's in. And that's because this market has just become very blurry. And you can just, buy things easily pretty much from anywhere.
And, we did talk about Gen Z a little bit in a previous section, but this is a group that is really primed to be your top omni-channel shopper because they are so comfortable living in as many platforms in the moment as they can be. So they are most likely to engage in some sort of omni-channel behavior, whether you're buying it online, seeing it online, buying it in store, or vice versa. They're really just increasingly more likely than average to use their mobile device to get information, to make purchase decisions, to look for offers and coupons and other sorts of promotions. Some examples I always kind of love seeing it relates to this is, they do love going to stores, even though they do live online. And so you need to really mimic anything related to the in-store experience on their phones. So there was a great case study from a while ago where Sephora realized that people were getting deterred from, making purchases in stores because their Wi-Fi and cell reception was not good. So they were going to the stores, but they wanted to look up information on their phones while they were there. So this is a really kind of tactical improvement you can make to ensure that the omnichannel shopper just is always having the same experience available to them, regardless of what platform they're using. And it goes very seamlessly from one to the other. We also see this translate very well, especially for Gen Z, into commercializing social media. So even though, in some cases this is a bigger deal globally than it is in the US, we see a good chunk of people, led by the younger generations, shopping on TikTok Shop, via like Instagram shopping platforms or ads, Facebook Shop, WhatsApp even. There's a lot going on there. And so you really can't underscore that. Certainly, a platform like TikTok is in a little bit of flux in the US right now, but you cannot underscore how much potential there is for social shopping because it is, just the next level of seamlessness that people expect beyond just, websites and apps that are, specific to a retailer. And then I think you're closing this out, Steve.
Yeah. So, with retail media networks, this is really where, impulsivity kind of lives in this online or omni world. Especially as shoppers are, uh, either they're all carrying their mobile devices into stores. So, the stores that geo-fence, their signals are kind of losing out, as Rachel said. But for the vast majority of shoppers, they are using their mobile devices to search in store, either with retailer apps. Sometimes it's wayfinding, but in all of those cases, that is an opportunity for the retailer to start conversations, and drive more impulse purchasing into those experiences. So, if you've been wondering what retail media networks have been leading up to, it's been personalized shopping experiences. It's providing features within their apps that allow for either talking to nutritionists or just boosting kind of that retail brand equity and loyalty as much as possible, and that really hinges on how well those experiences are. We've never been in a time where shoppers have put so much emphasis on the experience that they're having in retail as we are now. We've kind of come full circle in a way because we went from having high touch, in when had supermarkets come in, then we sort of went through this year of the years of self-service, and now we're kind of back to shoppers wanting to have a really nice experience in stores, and they're rewarding retailers that give them that.
Great. Meryl, I don't know if you want to move on with just a couple minutes left to our wrap-up slides.
Yeah, I was just going to say, let's do that. And then I can probably squeeze in one of the questions, but I'll kind of blend it with a couple of them. So
really in our last couple of minutes, obviously, we cannot cover everything that's going to impact 2026 today, but there are a handful of other things that we think are important to discuss that we'd be happy to do in a follow-up. We are tracking really closely GLP-1 anti-obesity medications and all the ripple effects of those, looking at commodity volatility, which is probably going to continue well into this year. We already talked a little bit about private label and AI, but there's a lot more where that came from. And so I know our contact information was shared, but do want to give one plug to something that Naturally and some other folks are involved in with NIQ, where we are doing a founder pitch slam, giving people the opportunity to showcase their ideas at our annual C360 event in June. And so there is a QR code here. I'm sure it'll be in any follow-up communications as well, where you can register for our webinar next month on what's involved and to really get the opportunity to be involved. So we want to make sure we did a quick plug for that and make sure everyone was aware of it before we close out.
And we do actually have actual sharks.
Yes.
From the show. We had Mr. Wonderful and we had Damon Johns. So it's a big deal.
Yeah. Absolutely.
Yeah, that is such a great, and it's a great time. So it's something to think about, and it's one of the areas that I enjoy doing so much is supporting founders getting ready for these. So absolutely, reach out to that. I'm going to just ask this final question. I'm going to blend it all into one very, quick thing. But one of the things that came up with obviously the whole ready to drink non-alcoholic
Yeah.
play matched up with health and wellness and longevity, personalization. Where are we seeing any of that in making some of these purchasing decisions?
A lot in one.
Yeah, that's why I like.
Yeah, no, I'm sure it's a hot topic with this group for sure. Yeah, I don't know, Steve, any thoughts?
I don't know if I've got a perspective
Yeah.
on on that particular subject.
Yeah.
We do have a beverage vertical that they're talking
Yeah.
about that all the time.
Yeah.
So that might be a follow-up we can offer definitely.
Yeah. And
So
we
in
have
the last 10 seconds each, then, what do you think the one takeaway to consider in this crazy time?
I would say keep interrogating what value means, because there may be some things you're not thinking about.
Yep, and focus on experience.
Yeah.
Experience. Every category manager should be thinking about being an experience architect for their category, for their brand, for their retailers.
This is wonderful. Monique, anything, Renee, anything we need to know before we close out? I know that we're a couple of minutes.
We can just say farewell. Thank you for joining us, and we'll be following up with all the contact info, resources, etc. Thank you, Meryl. Thank you, Rachel. Thank you, Steve.
Thank you.
Thank
Thank you.
you.
Bye.
Bye.
Bye.